All right. Had another good day in the market in the sense that we can pretty much tell what the market is telling us. And it's, if we go by professing of the Japanese race traders, let the market tell you what the market's doing. Moving up, pulling back. Moving up, pulling back. Moving up, pulling back. Now, Friday, even though Friday was not a very powerful day for the Dow, and stochastics were not in the oversold area just yet, there was kind of an implication that maybe the selling had stopped because we had a big bullish harami in the NASDAQ, which would have told us the selling had stopped. Today was good confirmation. Bullish harami, gap up, and a close above the 50 as well as the T-line. At least it puts us in the mode that we're not heading in a powerful downtrend, that we're either coming back up to get back into the upward trend channel, or at least in a sideways choppy mode, which still makes this a very profitable market to trade in, because there are going to be positions going up as well as positions going down. T-line is the 8 exponential moving average. It's our T-line, which we call the trigger line. Very simple. If you see a candlestick buy signal and a close above the T-line, you're going to be in an uptrend. If you see a candlestick sell signal and a close below the T-line, you're going to be in a downtrend. All right, and also on Friday, the S&P 500 did a bullish harami. And where do we want to see where the selling has stopped? Usually on a major support level, like the 50-day moving average. Then today, bullish confirmation with it closing up above the T-line. Makes also our analysis very simple. If we know the simple rules of each signal, we know what we should expect tomorrow. If we see a positive open tomorrow, which way are they going to be taking this market? They're going to move it in the direction of how they open it. And if they open it positive, what's the magnitude of that move likely to be? Same magnitude as this candle right here. So if we see a positive open, we're going to see a doji sandwich. If we see a doji sandwich, that means they're still taking us up above the T-line. Means we're pretty well can be confident that we're back in an uptrend, looking for it to move back up into this trajectory. All right, some of the other indicators, crude oil prices. Notice crude oil prices have stopped the downtrend, but they aren't real bullish as far as the uptrend. They're dojis, which kind of gives us the implication that if they hit up here at the T-line and use it, that there's more than likely going to use this as resistance. They may still have some more downside. Gold, this is why we like to use the candlestick signals. Because I don't think it's going to open lower. So I think the stochastics are coming up. We've had a bullish harami. We've bounced up off the 50, closed above the T-line. This is all implications that we're probably moving higher. If it does open lower, doesn't necessarily mean we're selling off, but at least we still will probably be bobbing around in between the 50 and the T-line. But I think right now the probabilities are, if it opens higher, we're going to be going higher. All right, what were we on? Let's see, gold. Gold, this is why we want to use candlestick signals. Today, all day long, or I say all day long, I heard one time them saying, oh, gold is popping back up. It's showing some strength. Well, notice what it did. It opened right on the T-line and traded off. So gold was up, but to me, that was not a strong signal. That was telling me they failed the T-line. Their price still taking gold down. And silver, same scenario. Not up very big, and when it did open, it was trading lower. So the advantage we have with candlestick signals is not just the price move, but what did the price move tell us today? And if they open higher and trade it lower, tells you there wasn't very much buying going on after they opened it. Let's see. The grains are all kind of moving kind of sluggish and sideways modes. This is soybeans falling back. Corn kind of rolling over again. This one could probably be shorted if it starts showing weakness. And the meats, feeder cattle, kind of bottoming down here, not really knowing which way it wants to go. Same with live cattle. Not really in any direction. Now, hogs. Yep, even hogs opened up higher in the after hours. So hogs may have had a good indication that they were taking it down further after the left-right combo right here at the 50, and then a close below the T-line. But after hours, they're taking it back up. So looks like hogs are in a sideways mode. What is a double day? A double day. What is a double day? A double bottom, a double doji. Kevin, I don't know what a double day is, except that he invented baseball. Stochastics are still in the oversold area, but remember, it's the signal versus the stochastics. Right now we're in the oversold area, obviously, in gold, but that doesn't mean it's going to go up. Let's see, a double day. There's a double doji. Sound is going in and out. It may be this darn mic. Is the sound going in and out for everybody? All right, you might just have to reboot and come back in again. So anyways, gold, that doesn't look too convincing for me. What do we say? Crude oil, not too convincing. The dollar looks like it's doing the obvious, came up, moved back to the T-line, or to the 50, and now is back in an uptrend, even though it was a little bit sluggish today. Again, as long as you're trading above the T-line, that tells you you're probably in an uptrend, which means the British pound still slow pullback, but seems to be supporting on the 50. However, that doesn't mean it's going to turn up. It may just kind of ride down the 50 for a while until there's a change of heart there. The euro had that kicker signal, and it's still trading below the T-line right now. Stochastics heading down. This one I would continue to stay short until I see it close above the T-line. The only one, let's see, everything else looks kind of sluggish. This is sugar moving sideways. Cocoa. Cocoa might be pulling back, but the obvious one right now is orange juice. Notice it had the gap up doji, then it's been drifting off since then, and now we have a doji gap down through the T-line. Good prospects that could bring orange juice back down to the 50-day moving average. Okay, with that, let's take a look at a few of the stocks that we've been following just to kind of observe the obvious. We've been in UNXL. We had not the bad news, but the news last week that they're coming out with a new offering. Doji at the overbought condition away from the T-line, brought it right back down to the T-line. The next day we did the bullish Harami, which pretty much told us the selling had stopped. Today that's confirmed, and notice what they used for support today. Came right back smack dab to the T-line, and started back up. So I'd be anticipating that there's a high probability we're back in a J-hook type pattern. Did you buy stock or options? Peter, what's that related to? So anyways, on this one I have options. I had a lot of good options, made big profits right here, closed out most of my Aprils and some of my big profit Mays, and then bought some more Mays, but the lower priced, higher priced, or lower, higher priced strike prices with lower money, just so I kept most of my money. Yes, I've still got calls on this one. Let's see. All right. We also had recommended PMT the other day,
price above 18 yen,
which still looks good. There's that bullish Harame with confirmation. Backed off one day, but still heading up, and it looks like you've got the J-hook type pattern set up. So this one you can continue to own as long as it stays above the T-line. Left-right combos are a doji followed by a bullish engulfing signal. See if I can see one anyplace. And obviously a bearish engulfing signal, or a bearish signal is a doji followed by a bearish engulfing signal. SGEN, I bought some more calls on this one. I made some money with this on this move. Now it's starting to break out. Now we're going to finish up today with breakouts, how to analyze them and why to analyze them. But notice where we are on the close today, above any of the trading. So we're essentially wave 1, wave 2, kind of this little cup and handle starting into wave 3. Vivus was one that we recommended a few days ago because of this T-line crunch type move. Notice what they did. Here's a left-right combo. A doji with just barely a bullish engulfing signal, but at worst it's a doji followed up by a bullish confirmation. Number one, every time we analyze a buy situation, we're trying to put as many elements of positive trade as possible into our analysis. Stochastics curling back up. 3, 4, 5 dojis. A doji followed by a left-right combo bullish candle that closes above the T-line. So what's our simple entry strategy? Well, if we see a candlestick buy signal, what do we want to see the next day? We want to see that the bulls are still there. In this case, if the bulls are still there and they continue to take it up, what other aspect are they doing to make this a positive trade? They're breaking out this downward trend channel. Where's our first logical target? Up here to the 50-day moving average. If they fail, where are they going to bring it back to? The T-line. To stay in this, what do we need to do? We need to see it open positive and trade positive the next day to stay in it. Exactly what it did. First time it came up to the 50, it failed. As long as it didn't breach the T-line, we were still in an uptrend. Next time they brought it up to the 50-day moving average, they broke it out. Now we've got a little bit of selling, but what's our kind of rule of thumb that if you break through a resistance level, they're usually going to come back and test it as support, which is pretty much what they did today and took it back up. Also, what is our trend? Our trend really hasn't been broken. We're still in this upward trend channel. SNTS, another one that has a series of little hammer dojis, bullish confirmation, staying above the T-line. This one you continue to hold as long as it doesn't close back below the T-line. And notice what it did today. Profit taking right back, smack dab to the T-line and taking it back up. Now, we're going to be going into how do you analyze where a breakout situation is going to occur. Well, right now we still have stochastics heading up. we're still staying above the T line. We've closed right here at the resistance level with a doji. What's our simple rule of a doji? It's going to trade in the direction of how they open it. So if this opens higher tomorrow, that basically tells us we're still in an uptrend. What do we not want to see from this point? A lower open and a close back below the T line. No, it's not too late to buy SNTS based upon if it opens positive. I think you're in wave 3, and if this was the magnitude of wave 1, wave 3 should have another 2 or 3 points to it. Now notice what started this uptrend. That slow curve with the breakout. A slow curve we're going to be looking at later. This is probably one of your best short-term trade pops, whether you're day trading or buying options right here, because the probabilities are pretty great that if it doesn't pop this way, it's going to trend that way. So that's you want to keep an eye on these slow curves, because that essentially tells you that investor sentiment is coiling up like a spring and about ready to pop to the upside. This one type of pattern is one of the strongest ones that I've been making profits from for the last 6 months, just because the market's been in a slow uptrend. Where would you stop? Put a stop loss here? Exactly what it's telling you is if it closes back below the T line, something's failed, you close out the position. Let's see. We also have ABMD. ABMD is very simple. It's done all our, came out of a fry pan bottom, stayed in an uptrend until where it hit the first resistance level up here at the 200-day moving average, pulled back indecisively, had a T-line crunch, went up through. Now it's pulled back, didn't hold at the 200. So where would you have been out of this position? Probably you close it out right here. Where do you get back in? We're right back smack dab on the 50-day moving average doing a doji followed by a gap up, which is our best friend. So you stay in this as long as you stays above the T line. And what's this also telling us? We had a little doji type day that supported back here at the T line. If it opens positive, what type of signal are we going to get? Possibility of a doji sandwich. If we get a doji sandwich, that means it's going to move the same magnitude as this candle up here, which tells us we've broken out through this little level, that we're probably in wave 3, starting with a gap up doji. Which stochastic line do you follow? Doesn't matter. All you really want to see is where the stochastics are in relation to your trend. Obviously, a candlestick buy signal in the overbought condition doesn't mean much unless it's breaking out through a resistance level. A candlestick sell signal doesn't mean very much in the oversold area. Logic says we're looking for a candlestick buy signal in an oversold condition, and we're looking for candlestick sell signals in the overbought condition. ROVI, the analysis on this one was very simple. We had a scoop type pattern. There's our doji sandwich that told us if they opened up positive. If you see a doji forming right on a resistance level or a possible resistance level, stochastics coming up makes it extremely simple. If they open up positive the next day, they're going to go positive with a pretty much a very high probability situation. And if this is the magnitude of this candle, it's going to be at least the same magnitude. If they move it up with that same magnitude, it probably tells us that they're moving away from the T line. This one, all we have to do is stay long as it doesn't close back below the T line. And what do we usually expect coming out of a scoop type pattern? A good strong slingshot effect to the upside. And so I'm kind of illustrating this because if you analyze a chart and you can see your signals and your patterns, and you know what the basic rules are of your patterns, your signals, and the combination of those signals, you pretty much put all the parameters in your favor. Can you buy options on UNXL even if its earnings are coming out next Tuesday? We'll get back to it, but I'll answer that real quick. If you go back to a very simple statement of candlestick analysis, that the signals are the accumulative knowledge of everybody buying and selling during a specific time frame, then if they're buying and they know the earnings are coming out next Tuesday, then that tells you they know something. They know that the earnings are coming out, and it apparently is not affecting their buying or selling decision. If a stock is going up while the market is cratering, people are buying that stock when they know the market is cratering. So again, it's the accumulative knowledge of everybody buying and selling during a specific time frame. So do I buy at earnings, going into earnings? If the charts tell me that people are still buying based upon their decision that they know the earnings are coming up, yes, I'll buy based upon the chart. Everything else around it is just information that is added to people's decision-making process. So this one, I wouldn't be afraid to be buying, especially if it again opens positive tomorrow. Now I hope remember we were saying Netflix was in a kind of bad shape until somebody mentioned it today when it had come back up with an inverted hammer right at the support level, that by that time you should have covered your short positions, because if this was a short, it should have opened negative today and gone this way. The inverted hammer, even though it doesn't show up as often as some of the other signals, is an extremely high probability that if they open up positive after an inverted hammer, they're going to go positive with it. And it has a very simple stop loss. If it opens positive and it has an extremely high probability it's going higher, then where should it be stopped out? It shouldn't open higher and then trade back below the inverted hammer head. If it does, that tells you it's not working. Get out of the position immediately. Let's see. Okay, so anyways, this is why you want to let the chart tell you what's happening. If you had been short here, especially when it came up through the high of the inverted hammer, number one, after opening positive, that tells you exactly what's happening. You should have been out of your short position at that time. Okay, some of the other charts that are looking good right now, and these again are the nice thing about the chat room is people are identifying these during the day. This one is setting up. Now, it was looking better earlier today, but it's setting up that fry pan bottom, and notice what it's starting the uptrend with, a morning star signal. So this one you want to start watching, because if it starts popping back up and breaks out through this level, you're probably going to have a good, strong price move, probably along the magnitude of that price move right there. And notice again how this one got started. There's that slow rounding curve, and they finally break it out. And what was the additional confirmation? A bullish day, a doji, another bullish day, that doji sandwich. And the result right now, or not right now, the result of a doji sandwich is that it's usually going to go higher after that type of signal or pattern. HGG, S.HGG, will. Is that HGG or is this another? No, it's the, all right. Smoke them if you got them. Got to wait here for a second for these charts to come back up. There we go. Okay, ACAD. Big gap up, and then notice what the pullback is. Remember, if we know what the nature of a signal is, and we know the nature of a doji is indecisive, when they're pulling back and it's indecisive, that tells us there's a pretty good probability they aren't selling hard. They're just consolidating, and notice where it unconsolidated. Right here, smack dab on the T-line, and they've taken it back up. It looks like it has closed just slightly higher than where it closed over here. I can see this by this darn little yellow box. That it closed on this day at 1310, and today it closed at 1315. So this is what you call an advanced method pattern, which is a continuation pattern, which means they could not bring the selling back down through the open of the candle that told us the bulls were in control. Now they've closed it above the last candle. That tells us there's a high probability they're going to take it higher. You wouldn't really necessarily call it a bull flag. I just look at it as when they're pulling back, they're doing it very indecisively. Okay, now let's see if we can get HGG. HGG doing that J-hook type pattern. Once again, if you look back at the pattern of this uptrend, kind of a rounding bottom with a breakout. Another rounding bottom with a breakout. Now we've got a J-hook pattern. This one, if it comes back up, still holding this one long, if it comes back up through today's open tomorrow, you want to be buying because it's basically breaking out through this J-hook pattern, and we're probably in another wave to the upside. Probably this one the same magnitude as that move right there. You call ACAD a buy signal? Yes, that's called a methods rising pattern. Let's see, what else we got here? TSRX. Nice pattern. Again, broke up off the 50, rounding bottom, breakout. Notice it broke out through this level. Nice uptrend until we had kind of that belt hold, dark cloud type signal. And came smack dab down here to the 50-day moving average, hammer, bullish confirmation. Look for wave 1, wave 2, starting wave 3. This is very simple. You buy this on positive trading, and all you have to do is stay long as it doesn't close back below the T-line. BLC, there's that little rounding bottom again, kind of a scoop pattern, broke out. And now we've got another J-hook pattern setting up. Notice how this J-hook pattern is setting up. A morning star signal. Today we have a doji type day. Day of indecision, but using bullish indecision. Makes this very simple. If this opens positive tomorrow, we've got the possibility of a doji sandwich, which means that tomorrow could be the same magnitude as this day. If that's the case, that means they probably have broken out through the high, and we're going to be in wave 3, which will probably be the magnitude of this wave right here. Chiquita Brands. Morningstar, or not a Morningstar, doji, bullish confirmation, now a gap up. Now, a lot of people are afraid to buy a stock that's already up 10, 12, 15, 20, 30%. Well, if we can add up all the parameters of why this is still a good buy, number 1, we've got doji, bullish confirmation. Number 2, we've got a breakout or a gap up. Number 3, it closed well above the T-line. And number 4, it broke out through this whole wave. That tells us we're probably going to be in another wave to the upside. Again, wave 1, wave 2, wave 3. The more pieces of evidence, or the more criteria that we can put together to tell us we are probably in an uptrend, the higher the probability we're going to be in the right trade at the right time. GTN, I think this is one of the shipping companies. No, Gray Television. Another rounding bottom with a breakout. And notice what it's coming out of, this big kind of fry pan bottom. Now, we're usually saying you want to buy on a buy signal when you're in the oversold area. However, if you can see you're coming out of a pattern like a fry pan bottom, the exuberance that's coming back into this stock is going to be usually when it's back up in the overbought area. So this one is very simple. If it keeps trading positive or opens positive, you can still buy it with the anticipation that the next move is going to be somewhat the same magnitude as this move right here. And very simple stop loss. It shouldn't close back below the T-line. JKS. This is what we call the stutter step. Nice strong signal. Doji gap up. There's your best friend. Took it up again. Pulled back. Pulled back where? Right smack dab to the 200. Was it decisive selling at the 200? Nah, it was doji, little selling, little buying. Now we have a kind of a hammer signal and a close back up above the T-line. Where's our next target? Probably right up here to the 50-day moving average. Call this a stutter step because a trend doesn't usually or doesn't always reverse and go straight up. You've got a big downtrend. Now you've got a buy signal situation where you could almost look at this as a cradle pattern. Pops up, selling because there's still residue selling from this, and then they pull it back and start it back up. That's what I call the stutter step. Stutter step is just like a double bottom. But the bulls step in, the bears get nervous, the bears knock it back down, and then they see the bulls stepping back in. They finally say, get me out of the way, and that will start your strong uptrend that time. VIPS. Nice little rounding bottom, and you can pretty much analyze which direction is this stock going. It's in a nice steady uptrend channel, and it just came back down to the bottom end of the channel. Started seeing buy signals. Where's our next likely target? Draw a line right through the tops. It's going to be up here somewhere. Q-Core also showing signs of bottoming. Little Morningstar type signal. Another Morningstar type signal. If this opens positive, what will it be doing? It will be showing us that the T-line's not acting as resistance, and it will be showing that this downtrending channel is being breached. Where's our next likely target? Either one of these moving averages. And SBGI, we made very good money with this on options last a couple weeks ago, especially taking profits here. Notice again that little rounding bottom. What do we expect coming out of a rounding bottom? A big pop. Either we've seen a lot of times where they gap it up big and or see a big candle like this. Now, we over the weekend, we did, how many stutters can you get? Oh, I don't know. Just kind of a pullback after the first move up. Let's see, what was it? Oh, stop losses or profit taking. We had a very good group of people here this weekend doing the private training session. And so I hope we illustrated the stop losses, because that's usually everybody's weak point, is trying to figure out how do we take stop losses or how do we set our stop losses. One of the criteria that I use is if you see a price move, and this was a huge price move, this basically moved from 20 to almost 28 in 3 days. That's essentially I should figure this out. Is that a 20% move? Remember, most people are happier than pigs in doo-doo if they can make 10% return on their portfolio in a year. If you're making 20% on a trade, what do you think other people are going to be doing? They're going to be taking profits. So I just have a very simple rule. If I've got a big move like this, and I haven't taken some off here, if it opens lower the next day, that pretty much tells me they aren't going up. That's a 40% profit. That's what I thought. Wasn't thinking fast enough. And with the calls that I had, it was a big profits. But if they open it lower on the next day, that pretty much tells me what's happening. They aren't taking it up, they're doing some profit taking. Over 8 bars, so if I haven't taken off half the position here, I've taken off half the position here. Worst case scenario is if they open it here and they come back up through this level, that means the bulls are still there. I get right back in that half position. If they keep taking it down, I get out of the other half of position. So my average sell price is somewhere in here, which is fine with me. Yeah, that's better than 20%. Now, what do we have? We've got a strong price move. What's a prerequisite for a J-hook pattern? Strong price move, pull back, right here to the T-line. Now they're taking it back up. This one can be bought again with the anticipation that if they break through this level, you've got another potential good-sized move coming up. And HBI. Oh, it's coming along. It's coming along. There we go. This is what we call the classic. There's your fry pan bottom with a breakout. Then your slow curve with a breakout. A J-hook pattern. Now you're setting up with a bigger J-hook pattern. This one can be bought on positive trading tomorrow, just using your T-line as your stop. An RBC. This not only has done buy signals and breached the T-line, but it's also broken this downtrending channel. I would suspect more upside on this one. All right, I have already gone over time, and I haven't even gotten to the ones that are kind of illustrating breakouts. Breakouts are easy to visualize with candlestick analysis because essentially what we're looking at is a big price move that broke us out of this level, breakout. So what did they do immediately? Started profit taking. And that's not unusual after a stock's moved up 8, 10, 12, 15, 20%. Profit taking, but we can see much more visually when that profit taking's over. Bullish Harami, hammer, type signal, doji, bullish Harami. Now they're starting to take it back up. If we know wave 1 is this, we know this should be wave 2. We can either be buying here or buying based on a breakout situation. If it fails at this level, what do we have? We pretty much have a double top. If it goes through, we know that we have our J-hook pattern working. So look what happened this time. We had a doji right here at the same level that it was kind of at the resistance level. And we know our very simple rule of a doji. It's going to move in the direction of how they open it. They open it positive, which is telling us two things. They're taking this candle up, and if they take this candle up, they're breaking this level. That tells us we're in wave 3. Same type of thing occurred in Airy, kind of a J-hook pattern. When it broke out through this level, it told us there was more upside. I've been making some very good money with ISIS because it had another little rounding bottom with a doji right here at the breakout level. Told us if it opened positive, we don't have to hesitate all that much. If we see it open positive, we know which way it's going to be going. If it opens positive and it's going to go positive, we can assess right from the open that it's going to break through this resistance level. And if it breaks through that resistance level, Where do you think everybody else is watching to see if it's going to break through? Right here at the resistance level. That means we're getting in early, and it should break out into new territory, which obviously it did. So that type of assessment can be applied to a chart like this. Another one that had a nice little rounding bottom breakout. On a breakout, what do we get? A very strong price move. If we have a J-hook pattern, we see it pull back, see it curving back up again, and notice what it did today. A doji type day, a hanging man or a hammer signal. If it opens positive, what's that tell us? That there's going to be, it's going to go positive, and it's got the possibility of doing a doji sandwich, which would be the same magnitude day as this. If that occurred, that takes us well above this level and tells us we're well out into wave 3. Do I buy on the open? Meaning, if I see this open positive tomorrow, it's going to be based on how is our market opening, meaning the market in general. I don't want to see in the morning that the Dow is down 120 points in the pre-market futures. That's pretty much going to tell us that there's lots of selling going on for some reason. I don't want to be buying something right away when everybody's selling. Now, if it does, the market's down 120 points and this opens positive and starts creeping up, that means everybody that's in there buying also knows the market is down 120 points and they're still buying. On the other hand, if they open up positive and it's not moving, there's no sense jumping right in because that tells us that we're probably not going to get a lot of buying pressure going on. But on the other hand, if we think we're in an uptrend and they open this positive tomorrow, or the market's positive, and they start taking it up, and this one opens up positive, that tells me exactly what I need to know, that there hasn't been a change of investor sentiment in the market that should not deter this pattern. And if it opens positive without any fear of selling going on in most of the investors, that means that this pattern is probably going to work. Do you use a lower time frame stochastics to influence your entry? Not necessarily. The only time that will happen is, let's say I think this is a buy signal and they open up positive the next day, but immediately start taking it down. I know this is a potential buy signal and that this might just be a day of consolidation. And then I'll flip back to my 5-minute and my 10-minute chart and see what it does once it hits the T-line. If I can see the 5-minute chart and 10-minute chart start curling back up and those come back up above the T-line, then I'll start buying down here with the anticipation they're going to close it back up toward the top of the trading range. And we're going to be kind of looking at that in the next couple weeks. We're going to have a session on day trading, and that's part of the day trading process of analyzing what the previous day did, what the market's doing, and what our 10-minute chart is doing. If we can't watch the markets, is there a good method for setting buy and sell stops? Yes. And that would be, let's say you want to buy at a positive open, but sometimes they open positive and immediately turn around. Might take it a little bit further up and say, I want to buy up here versus right here. That if they go in that direction, that means they weren't just popping it up and turning it the other way. They were moving in that direction. And we can go through we're going to be going through another training session fairly soon on where to set your stops, both for buying and for selling. All right, so anyways, this is all just simple adding up the factors. Strong price move, pullback, a doji type day that's supported on the T-line, stochastics coming up. Makes it very simple. If it opens positive tomorrow, I'd be buying this immediately with the anticipation we're going to have another up day the same magnitude as that day. We did that pretty much with IOC. Notice what started this uptrend, a kicker type signal. It consolidated a little bit, but it's at the T-line, and we're pretty much right at the resistance level. So if this one opens positive again, going higher, because we still got some juice left in our stochastics, that basically tells us we started with a signal, we're up above the T-line, and now we're breaking out through this level. That means we probably have wave 1, wave 2, and starting wave 3. And what was that one? Oh, we recommended NIHD today on that same basis. That here's your J-hook type pattern. There was your close right at the resistance level. It opened, what is today? Monday. Opened Friday, traded up, did a little spinning top, which told us they broke out. So further confirmation would be if they opened up positive and started trading it positive, that you were probably still moving up in this trend, which means wave 1, J-hook, wave 3, probably taking us up into the 950 area. Peter, I usually buy money at, or calls at the money, depending on what I think the magnitude of the move is going to be. And then if I think things are getting stretched out, but getting still with potential upside, then I'll sell the in-the-money calls, hopefully with a profit, and then put a little bit more money into buying out-of-the-money calls even further up, because if it still moves up in a high-risk area, I'll be making some money on those. If it turns on me, I don't have that much money exposed that I'm not giving back all my profits. I'm just giving back a little bit. Where would I put a buy stop right now? I'd use the T-line as my stop. Let's see, what else we got here? We also recommended NPSP. Same logic. Came out of a fry pan bottom, gap up. Rounding bottom, gap up. J-hook pattern. Open positive today. We're breaking out into new territory. Now, notice what we did today. Another doji, which makes this very simple. If it opens positive tomorrow, you can be buying immediately with the anticipation of a doji sandwich, which means we're now in the next wave to the upside.
That white MM13
AMRI
moving average.
Breakout in the sense that you had this downtrending channel. You had this little squeeze between the 50 and the T-line. Now they've broken through. That's usually a good indication that we've going from wave 1, wave 2, right smack dab back to the 50-day moving average. If it opens positive, we're in wave 3, which means our next magnitude of move is approximately that same move. NPSP target. Oh boy. This is one of those darn solicitation calls. So I'm going to put them on hold and just let them sit there. Oops. Let's see what happened here. All right. The option classes will be within the next 2 weeks. And they'll probably be a Tuesday night, Wednesday night, and then a next Tuesday night and Wednesday night. So anyways, this one, if it opens positive tomorrow, would be buying immediately. Since SP or NPSP is overbought and we have a gap up at the end of an uptrend, should this be a sell instead of a buy? That's why you need to know what your patterns are telling you. We're in the overbought area, but what type of pattern are we coming out of? Coming out of a J-hook pattern, which tells me I've got probability that the next move is going to be the same move. That's exactly why I just mentioned, if you're buying a signal, you're usually buying a signal in the oversold area. If you're buying a pattern, you're usually going to be buying a pattern in the overbought area, because that's where the exuberance is coming in to break out that pattern. And where do most people buy? They buy exuberantly at the top. And PCYC, another one that has some nice signals and broke out through this downtrending channel. There's kind of your left-right combination. Let me make this bigger. Yeah, maybe not quite a left-right. But doji bullish confirmation. Today's confirmation took you away from this downtrending channel. Let's see. REGI. Another simple pattern setup. There's kind of your doji sandwich. What's our doji sandwich tell us? So there's going to be more upside. If there's more upside, it tells us it's going to break through this level. So now we've got a wave 1 and a wave 3 of that same magnitude. Now, again, the advantage of knowing what each signal, what the simple rules are, or what it's going to do on a positive open or negative open the next day, just gives us a higher probability of being in the right trade at the right time. Cree, also doing kind of an advanced method, but notice where it's sitting right now. With stochastics coming back up and you're not in the overbought area, you're right here on this resistance level. Tells us very simple. If they open this positive, this resistance level isn't acting as a resistance level anymore. And when other people see this going through that level, they're all probably going to be jumping in also. So it's a perfect case where you buy immediately, and if it closes back below the halfway point of that last candle, you close out the position. It means it didn't break through. Here's KER, K-E-R-X, rounding bottom, breakout, cup and handle. This one you can be buying on positive trading because if they come up through this level, it tells us they're probably going to come back up and test the highs. And BEAV, morning star signal followed by a gap up, closing right about where the resistance level is. If this opens positive, tells us it's breaking out through this level, tells us it's probably going to do a doji sandwich, which means we're going higher on this one. And CME, same scenario here, kind of a doji bullish confirmation, closed above the T-line and the 50 and the 20. If it opens positive, what is it telling us? It's not resisting at this downtrend anymore. The next wave is starting, which could be the same magnitude as that wave right there. Now, does that mean it's going to move that same wave? Not necessarily, but the probabilities are in your favor that that's the type of wave pattern that occurs or reoccurs in investor sentiment year after year, decade after decade, century after century. It just puts the probabilities in your favor. If the market is heading up, probably all boats are going to rise in a rising market. What we're looking for is the boats are going to rise a lot faster in that rising market because uptrends don't last forever. So you try to make as much of it as you can, and that's putting your money into situations that are going to produce the higher profit situations during that uptrending, during that current price trend or the current market trend. Here's another doji sandwich, bullish Harami, gap up, positive open. Now we're sitting right here on this resistance level. Oh boy. If it opens positive, where's our next likely target? They could take it all the way up to the 200-day moving average. Yeah, and this is just now analyzing the elements that we know work. Doji sandwiches work. We know breaking out through resistance levels work. We know that closing above T-lines work, and we know with stochastics heading up that we're probably in an uptrend. So here's another one, that if it opens positive, this is PBG, that it's breaking through this downtrending channel. Where is it likely to go? Up here to the 200, that's still a good 18% move to get up to that level. Ego, same scenario. If it opens positive, they're breaking this downtrending channel after a gap up doji through the T-line. Next likely target up to the 50-day moving average. And PIKE. This one's setting up. If it gets up here to this breakout level, now we know we have a wave 1, wave 2 that is just bouncing off the 50-day moving average. If it breaks out through this level, we've got a good potential of a wave 3 of this magnitude. All right, so right now, because the market has backed off and we've got still plenty of stocks that are moving positive, I'm still mostly bullish. But that doesn't necessarily mean that all stocks are going up. We've shorted TDC because we had a bullish candle with a gap down below the T line, and then kind of the flutter kicker. Flutter kicker also told us that there was more downside. If there was more downside, it wasn't going to resist it or support at this level, which it hasn't. So what do? You kind of draw your lines down here. That should be your next likely target. So you stay short on this one until you see a buy signal. And the other one was or RAX. Very simple analysis. Number one, which direction is it going? It's obviously in a downtrend. There's not great confidence there. So no matter which way the market's going, this one has failed again at the T line and still heading down. Stochastics heading back down. You just stay short on this one until you see a buy signal. So why do you have short positions in a portfolio when you think the market is going up? Because there's always those surprises. So you might, instead of being 100% long, with candlestick analysis, you've got a good probability that your bullish signals are going to work and your bearish signals are going to work. So, and if something drastic happens, at least you have a few bearish positions to offset any big surprise change of investor sentiment. So that's about all I've got tonight. So if we've got any questions, I'd be glad to take questions. If not, Jim, go ahead and do the double line. Okay. Jim, do the next double line in 12.3 seconds. Okay. GXP, another one that can be bought on positive trading. As you can see, you're in a slow, steady uptrend, and obviously it's going to come back up toward the top of the trend channel. CLF, you just want to stay short until you see a buy signal and a close above the T line. Now you can pretty much see that it's trying to bottom down here, but it's not necessarily meaning it's going back up. RVBD. Another one where you just stay short until you see a buy signal. Observe the obvious. The obvious is it's in a downtrend, and as long as it stays below the T line, you stay short. WLT, same scenario. Your belt hold bearish signal confirmed. Now you're in the oversold area. You do have a hammer. I would probably put a buy stop or cover my short position if it came up through the halfway point of this candle.
At NQM 13, 20 minutes, closed long position.
And CVS, another one that can be bought on positive trading because you have your doji. If it opens positive, it's breaking out through this level. Where is it going to? You can draw your price trend right up here. Now, is that a big magnitude move? Not huge, but it sure is a high probability situation that if you're buying some calls in 2 days, you can have a pretty good profit in the calls. Coke, stay long. Notice the kicker signal, and notice what it's doing. It's back to the top of the trend channel, and just acting, moving in a 45 degree from there. And VFH, oops, S.VFH. This one is trying to bottom, but nothing that has shown any great reversal. So unfortunately, you're probably still sideways until you see a very strong buy signal. And VIS, another one that I'd stay short until I see a buy signal. Nothing, yeah, even though it's coming up, it's not very decisive so far coming up. Caterpillar, back. That might be a reversal there. That's kind of your bullish confirmation of a spinning top with a booster behind it. But if I'm buying, I'm definitely watching to see that it gets through this downtrending channel. If it doesn't, I mean, obviously you're still in a downtrend. BlackBerry, I wouldn't be real enthusiastic just yet. Now you are in a big pennant formation, and it's still moving sideways. I'd rather buy it once it breaks out through that pennant formation. SVU, a slow, steady uptrend, another bullish engulfing. This one, all you can do is stay long as it stays above the T line. SYNA, Morningstar Signal. This one can be bought on positive trading tomorrow, confirming the Morningstar Signal as well as telling you the T line's not acting as resistance anymore. Roundy, another one that can be bought. Just use the T line as your stop, and then you definitely need to get broken out through this resistance level to really get any major move out of it. Halliburton, kicker type signal. If this opens positive, you want to be buying. Just watch what it does once it gets back to the 50-day moving average. But if it opens positive tomorrow, then you have that flutter kicker signal. That tells you they're going to take it up some more. Delta, nothing right now that would tell us that we want to be in this. With it closing back below the T line, I'd buy this if it came back up through, let's say, the $16 area. But right now, obviously, it's caught below the moving averages. Here's another one that has a very obvious trend. Pulls back to the 50. Now you're back up above the T line. If it opens positive, you're going to be right up here, which means you've got a doji sandwich, which also means you'll probably go back into a 45 degree from there, which will be the same trajectory as the previous trend. Oh, that's what I meant to say. Had a very good group, and from what everybody's feedback was, they got quite a bit out of the private training session. These private training sessions allows you to sit there, and if you're not getting something, you keep asking questions until it starts to get resolved. So it's a very kind of fast track on getting your mind oriented toward how to analyze candlestick signals successfully. So I've had a fun group. I think everybody enjoyed themselves. Food was good, and from what it appeared like at the end, that everybody got a much more, deeper insight into candlesticks at the end. So if there's people interested in the private training sessions, we will be doing another one up on Keuka Lake in the Finger Lakes of New York, somewhere between the last week of July and probably the first 2 weeks of August. So put that on your calendar. Your accommodations aren't as great as what we had at the Woodlands Conference Center here in Houston, but everybody usually gets their own room. You may have to share a bathroom, But it doesn't matter because by the time we get done with you each day, you're so tired, all you want to do is go get in bed and sleep. And then during the day, we got plenty of opportunities to flop around in the lake to refresh and then go back to the chart. So anyways, keep that on your calendar. If you really want to get into trading candlesticks successfully and fast, use these private training sessions, because after that, these sessions like tonight aren't kind of educational sessions for you. They're more confirmation of what you've learned and kind of solidifies what you saw during the private training session. So TICC, this one can be bought on Positive Trading tomorrow. Obviously, the next target is up there at the moving averages. Let's see, NMM. Non-fat milk. What about this NM? This one, Doji sandwich breaking out through this level. This one's going higher. That's a good looking chart. OXF. This has got that fry pan bottom. I don't know what the volume is, but I'd keep an eye on this one. If it breaks to the upside, you want to be buying immediately. And this is another case where on a fry pan bottom, unlike a signal where you want to buy in the oversold area, fry pan bottom, you usually want to be buying when it is in the overbought area. That's where the enthusiasm starts stepping back in. DN also has the potential of doing a doji sandwich. This one can be bought on Positive Trading tomorrow because that would break this downtrending channel, break through the 20, and obviously make your 200-day moving average as your target. CHRW, trying to bottom, but I wouldn't be buying this one yet until it does close above the T-line. UNH. This one you stay short until you see a buy signal. Today's trading pretty much told you what's happened after the bounce up, after the gap down. Day of indecision, tweezer top, which was resistance. I would suspect they're going to be taking it back down to the 50-day moving average. WFC, trying to bottom here also. You've got the potential of a doji sandwich, but you still got a lot of overhead to get through. I'd keep an eye on it. I'd definitely be looking for buy signals because this is a very common bounce. Up away from a moving average. When it comes right smack dab to the moving average and starts back up again, look for your buy signal. That's a very good place to buy. Vail, yeah, you want to go short, but notice where you are. You're right down here on this downward support level. Dojis, oversold area. Right now, I wouldn't say whether you want to be long or short. It's going to be based on how they traded off of this indecisive trading area. VDBD, still in this rounding bottom. If this opens positive tomorrow, it's breaking out through all this level. So keep an eye on this one. That one's still a good-looking chart. TZA is flat. I wouldn't be long or short now. It's just junky. I'd go someplace else. And Boeing also is too flat to be any great. Number one is flat. Number two, the magnitude of the move needs to be pretty big to make any money in Boeing. Another one, I'd be someplace else. CLR, bullish engulfing. If this one can climb back up through the T-line, you can be buying after that. Netflix, I don't know what to do with it there. Obviously, when we saw it trading above the T-line and the inverted hammer, that was the time to cover and start going long if you were looking at a double bottom situation. Now it's up, we're up around here. This one, all you can do is stay, if you're long, you stay long until you see a sell signal. A-Run also had a good looking chart with a Morningstar signal. It needs to open positive, though, to break this downtrending channel and the T-line. Let's see, we did ACAD. This one you can go long on the advanced methods rising. If it opens positive, you can be buying using the halfway point of this candle as your stop.
That white M13
XOP,
price dropping over 8 bar.
Nothing there yet that would get me real excited other than it's basing. You just need to see the bullish confirmation that they've taken it one way or the other. AT&T, whoops. AT&T, another J-hook. There's your fry pan bottom classic. This one you can be buying on a positive open tomorrow. MCP didn't do anything. MCP. MCP, I wouldn't do anything with it yet. If you went long because of the hammer, bullish engulfing, kind of your left-right combo, you stay long, but this has to open positive and trade positive to stay in it. Then once it does, it eventually it has to get through this level pretty quick. If it opens lower tomorrow, your downtrend is still in progress. So we did NPSP. This one you want to buy on a positive open tomorrow. If you own it today, you stay with it. Probably I'd use the halfway point, or I'd use the low of today as a stop, which would also probably coincide with your T-line tomorrow. WLT stays short until you see a buy signal confirmed. Abbott Laboratories. Right now, I wouldn't be long or short. It looks like it's in a congestion area. Stochastic's not telling us anything, and the signals aren't telling us anything, which means I'd be off someplace else. NVAX. This one's trying to do a J-hook. This one you can be buying on a positive open tomorrow using the T-line as your stop. And HZNP. HZNP has had, there's your left-right combo in the oversold area. You had a doji followed by a bullish engulfing signal, a close above the T-line. This one I wouldn't be too concerned, but it has to open positive and trade positive. If I was going to buy this, I'd buy this once it comes back up through today's open. That means it's breaking out through this resistance level. But this is a signal that usually will work very well. You're probably in an uptrend. Let's see, what is this? Rose Drilling? Rosetta Genomics. Okay. Another one that I wouldn't be in this until you see a buy signal. Right now, that's just an up day and a downtrend. UPS. Nothing that I would get real excited about until it breaks this downtrending channel. Otherwise, look what you've got. You've got this big dumpling top. So I wouldn't want to get into it until it broke this, which told me they're breaking the trajectory of that dumpling top. Ford, you still want to stay long as it stays right now above the 50 in the T-line. As a trader, you could probably be getting back into this. As a long-term investor, I would still hold on to Ford because the longer-term charts look pretty good on it. CLDX, this one you could also buy on a positive open tomorrow. doji sandwich, which would be breaking out even further out of this fry pan bottom. And then you just stay long as it doesn't close below the T-line. Hasbro's had a good chart here recently. With the gap up doji today coming out of this little rounding bottom, if it opens positive tomorrow, you still want to be a buyer. I'd probably use today's low as my stop. It shouldn't come back through that level. And PNNT, left-right combo, close above the T-line, breaking the downtrending channel. This one you can be buying on positive trading. Let's see, Pepsi. Pepsi's had that little kicker signal, and we looked at this a few days ago. If I remember correctly, maybe last Thursday, was it that when they took it up after a kicker signal and brought it back down, that was profit taking. What they needed to see was a positive open, which they did, took it up. This tells us we're still in an uptrend on this one. You continue to hold and use the T-line as your stop. Lulu, this is kind of a good little cup and handle J-hook type breakout. This one, expect some profit taking, but right now I would think that Lulu is trying to get back up to test the highs. That's still a good looking chart. Goodyear, nothing there that would make me want to buy. Stay short until you see a buy signal. CEO. This has to be probably overseas. S.CEO. Is that giving us the same thing? Yeah, this looks like, is this an ADS? It looks like it's traded overseas because that's why it gaps so much. But this one you can be buying on positive trading. You had your little doji gap up. And S.CF. This one you stay short until you see a close above the T-line. And so far, there's nothing there to tell you they're trying to take this one back up. Well, the probabilities at least say they're not taking it back up. CF or VFC, this one you stay long. It's probably from here going to go back into the 45 degree, which will be the same trajectory as this trend right here. Apple, you might be seeing a little bit Morningstar, but if you're long, you probably want to, or if you're short, you probably want to cover it if it opens positive. But with the prospect that if it fails here at the T-line, you can always re-short it. But right now we're in the oversold area. We're seeing a Morningstar signal. Why go against the probabilities? Cover short positions. I wouldn't go long until you see a buy signal strong enough to take it up through the T-line. CNX, you stay short until you see a buy signal and a close above the T-line. EGHT, this one you can get ready to buy, but I'd put my buy stop at 745. If it comes up through this level, you know you're in wave 3, which will probably take you up to fill this gap, number one, and then probably test the recent highs. RGLD, another one where you stay short until you see a buy signal. Just right now you're in an oversold area, but you're not really seeing anything that's any real constructive bullish signal. And CLG, you stay long as it stays above the T-line. As you can see, every time they brought it back down, they turned right around and took it back up. So this one, all you can say is you're in an uptrend until you see a sell signal. See, did we do CLF? COF, nothing there. Stay short. DC TH, that one's a little kicker type signal. I don't know what the volume is on this one, but if it's big enough volume, you can probably play this one. But the first target, obviously, is the resistance levels right here, which would fill that gap. Just be more diligent when it gets to the moving averages to see what it does. Coach hasn't shown any strength either. I wouldn't be long or short this one right now. There's not enough movement one way or the other. You're in a slow drift. I'd be someplace else. Facts. This one you can buy on positive trading, but again, your first target is just going to be right up here at the T line, or up at the 50-day moving average. We did ABMD. This one you can buy on a positive open. Remember, this gap up from the 50 tells you there's probably more strength coming in this one. OVTI, nothing there yet either. You stay short until you see a buy signal. Now, if they traded this probably back up through the halfway point of this candle, I'd probably cover it with the anticipation at least their first bounce is going to be up to the T-line. But if it fails at the T-line and starts backing off, then you can re-short it. Costco bouncing up, doing a piercing signal right on the 50-day moving average, which as we can see has been a support level all the way up. This one you can definitely buy on positive trading, because if it opens positive and trades positive and breaks through this level, that means they're going back up to the top of the trend channel. U.S. Steel, stay short until you see a buy signal and a close above the T-line. Bank of America. Bank of America is still very soggy. This one I wouldn't be long or short. There's just not enough movement. It's sideways, so it's stuck. See, we did SVU. Didn't we do ONTY? ONTY. This one can be bought with the anticipation it's going to go up to the 200-day moving average. CONN. This one has to open positive and trade positive to get in it. And if it did, it's going to do kind of a doji sandwich after the bullish engulfing signal of Friday. But if it opens positive, you want to be a buyer, and you just simply use the T-line as your stop. Another one that if it does a positive open, you want to buy immediately because you'll have a doji sandwich. And the doji sandwich would be taking you away from the T-line number one and breaking you out through this downtrending channel. Is it too late to buy ACAD? No. You buy it on a positive open tomorrow. Use the halfway point of today's candle as your stop. Betsy, come to the lake. We all get to flop around in our bathing suits. We get to watch charts as we're overlooking the water, and we'll have plenty of good food up there. Yep, Bill, that happens. And that happens with even regular stocks or normal stocks. Is that sometimes they'll trade good, and then they'll go into a period where they're just junky trader. You just have to move on, because essentially what we're trying to do with candlestick analysis is find the chart patterns that tell us the probabilities are in our favor of making money. And when that kind of disappears, no sense staying there. Let's see, Apple, would you buy puts? Whoops. Not right now. But if it came back up to the T-line and failed again, then you could buy puts. Either you have this as your your target. Notice right now it's kind of supporting here at this level, but every time it comes up to a resistance level, they back it off. And so this is where you kind of observe the obvious. Just ask yourself, is this an uptrend or a downtrend? Well, obviously it's been in a downtrend for quite a while. So what's going to change the investor sentiment? It better be a big buy signal to tell you there's now new investor interest in it. Don't you think COF is a buy on a gap up tomorrow above the T line if that happens? Well, bunches of them are a buy if they gap up. Yes, but we don't know if that's going to happen or not. So I'm not sitting here trying to anticipate. Right now, I wouldn't be buying. Now, we had that question over the weekend. I think it was on. No, it wasn't this one. Oh, pshaw. It was a nice big. Yeah, it was a big scoop type pattern. Had a big day coming from an oversold condition after a couple of dojis, big move to the upside. So the question was, why couldn't you anticipate that move to the upside? Because you couldn't anticipate that move to the upside. Remember, the signals are those moves that tell us there's been a change of investor sentiment. We're not in the business to try to anticipate a change of investor sentiment. We use those signals to tell us that has happened. Then we want to know what to do after that. Now, there's other situations where we can kind of anticipate what should happen based upon our current signals. For example, a doji, J-hook pattern, stochastics coming up, we can anticipate that if it opens higher, it's going higher. But there's a lot of times we can't anticipate when that buy signal is going to occur. The market maker move is expected 7% plus or minus. Okay. Wait till after earnings. Yeah, we can. That's true too. There's two ways to buy stocks, two ways to buy patterns. I'm going to go back to UNXL on the question of whether we should buy now. If you're aggressive, you can buy now, and then the day before earnings, if it's still moving in the right direction, close out the position and then see what to do after earnings. Okay, I guess that's. Oh, let's see. No, there's more here. Was that it, John? Okay, HXM. S.HXM. Yes, that was it. So the question was, why couldn't we anticipate this buy? We couldn't anticipate. Now, we could anticipate that if it opened positive after an inverted hammer in the oversold area, that it would probably be moving positive. But we didn't know whether it was going to move positive to here or to here. So the whole point of candlestick analysis is not to anticipate when a big, huge reversal signal is going to occur, but to tell us when the big, huge reversal signal has occurred, we're in a reversal. Yeah, I tried to stop drinking a long time ago. It's like Mark Twain said about his smoking, it's easy to do. I've done it thousands of times. GGN. Now, this has anticipation. Now, we couldn't anticipate that it was going to have a pop-up, but we know exactly what to do with it when we see buy signals and it closes right at the T-line. Now we have a high probability that if this was a reversal, we know what to do next. If it opens positive, it's confirming the buying, number one, and the gap up. Plus, it's telling us the T-line is not acting as resistance. We probably have more upside, especially with stochastics coming out of the oversold area. Okay, well, that's all we got for tonight. Oh, wait a minute. I didn't scroll down. More. Okay. Let's see. Never trust a man who doesn't drink. That's right. Or some weasel took the cork out of my lunch. You gave a tidbit earlier that I would like you to repeat. It was buying the pattern and buying the signal at certain stochastics, and those stochastics were opposite. Can you, I can remember what I said. Can you remember what I said? Number one, if you're buying a signal, it's usually going to occur when the stochastics are in the oversold area. That's a signal. There's a bullish Harami doji followed by a gap up in an oversold condition. On the other hand, Pshaw, let me think of one. NPSP, for example. Notice that's a pattern, and it's breaking out. It's a pattern, and the stochastics are up in the overbought area. Or let's say this was a fry pan bottom that was breaking out. The fry pan bottom was breaking out when the exuberance came back in the overbought condition. So very simply, if you're buying the signal, it's usually going to occur in the oversold area. If you're buying the pattern, it's usually going to occur when you're up in the overbought area. So that basically boils down to you want to know what your patterns are, because if you want to buy a big exuberant buying in an overbought condition, normally no, unless you can see that they came out of a pattern. Okay, everybody have a good evening. We will see you in the chat rooms tomorrow. Thank you for showing up tonight.